If you turned on the news this week, you were grabbed by a chorus of alarming headlines. Central banks adjusting interest rates, escalating tensions in global trade, and Washington locked in another high-stakes debate over expanding the national debt. Hello, Americans and friends abroad. This is your weekly look at the markets and, of course, a little bit more. Standard economic textbooks tell us a very simple story about commodities. When supply shrinks, prices go up. It's the unbreakable law of supply and demand, or so we're taught. But history has a funny way of poking holes in textbook theories. Take crude oil, something you and I know very well as we put it in our gas tank, usually every week. According to data from the Cato Institute and energy market historians, during the early months of the Iran-Iraq conflict in the 1980s, oil exports from the Persian Gulf were cut by over 12%. A massive chunk of the world's daily oil supply vanished overnight. And yet, West Texas Intermediate crude barely nudged upwards, creeping up just 5% and eventually dropping lower than its pre-war levels. More recently, you might have seen this. According to the markets by the Center for Strategic and International Studies, energy analysts have repeatedly pointed out a startling disconnect. Even when global checkpoints threaten up to 20% of all physical oil supplies, paper future contracts often drive prices downward instead of up. We saw this recently. The conflict that we're having over in the Middle East locked away about 20% of the oil, and there were a couple of moments here where the supply being dropped out didn't seem to affect the demand. We actually saw prices go to pre-war levels for a little bit, which makes me think there might be something more going on. It makes a thinking person ask, if 20% of the vital global resource can be locked up while prices fall, are we truly watching supply and demand at work? Or are we watching paper markets leverage and institutional shorting manipulate the room? And that brings us to our friends here, precious metals. Because if paper derivatives can suppress or swing a physical commodity like crude oil, what does that mean for gold holding just above $4,000 an ounce and silver sitting at $59 an ounce when we're told there is not a lot of supply and there's a lot of demand? According to the Silver Institute, silver is sitting at its 6th consecutive annual supply deficit, a physical shortage of tens of millions of ounces driven by industrial demand. Yet paper contracts at the COMEX trade billions of paper ounces every single day that never see the light of day. Are metals being moved by truly physical scarcity or by paper balance sheets? Well, while the paper markets play their games on electronic screens, the real numbers printed here in black and white landed on the newsstand this week. I have that right here for you. And we're going to take a look here soon at the exchange and what those numbers look like as reported here on paper. As we know, paper contracts can swing prices on an overnight screen, but physical wealth in hand has survived every market maneuver in history. The trading desk shows us what paper traded for today, but history tells us what real money is worth tomorrow. Of course, having your hands in both sides of investing and diversifying seem to be the most sound logic, but that is a conversation for another video, so let's go ahead and dive in and see what the news says is going on with those markets. And let me know in the comments below what you think about having 6 years of deficit and yet this still just being at $60. Anything strange about that to you? Maybe it's not, and that's okay too. I'm not here to say anybody's right or wrong, I'm just here to listen. Here we are. As always, we'll start with the Dow Jones Industrial, which I like the best. You can see here, 51,947 is where we sit. That's up 235 points. We're at about 0.5%. Notice here, we're sitting almost at a month out, really 20 days, from the all-time high as reflected right here. That's the all-time high. That's where we are. So here with the Dow Jones, we're not far from it. S&P 500 remains right here at 74.11, up 3.68 points. All-time high here is quite a bit further. We're going back to June, as you can see right there, but we're not incredibly far from it. The NASDAQ, however, is a completely different story. NASDAQ Composite 24,975, down 161. So it's moving independently. Call that mixed markets. And it is at 0.64%. As you can see, same all-time high as the S&P 500. And that is what that looks like on the chart. There's that all-time high. It's almost off the chart as this is a 65-day moving average. And here we are. Now, here's one of the things that people will say is why silver and gold aren't flying off the shelf. Oh, sorry, it's right here. And that's the Forex race, the yen, euro, and dollar. Crazy, crazy, crazy there. I think 2 years ago we would have thought this was impossible, but the dollar is actually, that's zero right there, gaining steam in value. And they say that's why there might be a little bit of a pause in the silver and gold kind of going back up to where it has been. I don't know if that's true or not, but it kind of makes sense. Internationally, there's just a couple of things of note. Brazil down 1.37%. We have China, Japan, South Korea, and Taiwan, which all have pretty stellar movements down, the most of which is South Korea at 5.72% negative there, but nothing crazy. So how about your metals? We just talked about where they're kind of sitting, but we can show you on a chart just so you know. And let me know in the comments if you think that that is possibly manipulation too, that the COMEX and other friends involved might just be putting prices of this stuff at a place where, let's say, commercial entities can buy it and use it for solar panels and computers like AI, so that it kind of locks in their price without having their products go up dramatically, which would then maybe hurt the consumer economy. I don't know, but that's just an idea. All right, so silver sits right now $58.90. That is a gain of $2.50 basically, which is great. 4.36%. I know I bought on the dip. I hope you did too, as that means it's basically on sale, but hey, it is what it is. Year to date, it's still down almost 20%, 18.5% as we started this year. It's $72. So that being said, there's still some ground to gain. However, if you're somebody who believes like I do that in 10 years, it's likely going to be much higher, then everything you buy today is basically on sale for that time. Gold, as we noted, is sitting at $4,068, which is up as well, 1.29%, or $52 on the year, or sorry, on the week. Year to date, it's still down 6%, so it hasn't quite been as volatile as the silver has, but it is still holding firm over the past week or so. That being said, we hope you have enjoyed this. If you'd like to support this channel, very simply, just like the video, subscribe and share it with your friends. If you think that you'd want to go further than that and you want to add some metal to your collection, to your stack, silver, gold, palladium, copper, platinum, whatever it is, you can use my APMEX affiliate link right here, and they pay me for referring you. There's no more added cost than that. It's absolutely free. So that being said, that's another good way. If you want to spend some money to help this channel grow, then maybe consider being a channel member. But that is what we have for you. Thank you so much for watching. Lots of cool stuff coming down the pipe. And until next time, stay classy and current with the culture of currency.